Since buying a car is one of the biggest purchases in a person's life and the biggest purchase we make that quickly depreciates in value, it's wise to take a look at all our options. Vast majority of people in US don't have money to pay outright for car. According to National Automobile Dealers Association, 85% of new cars are bought with some kind of car loan. And leasing is becoming more and more common, now accounting up to 30% of car loans. Both leasing and financing have advantages and disadvantages, just like renting versus buying a house. Today we will discuss pros and cons of financing and leasing, and we will see which suits best to your situation. Let's look at financing first. Financing simply means taking a loan for buying a car and paying interest on that loan. Once you finish paying the loan, you own the car at the end. Average car loan length in US is around 5 to 6 years. Suppose you buy a new car worth $25,000 including tax and all charges. And you finance it over 5 years with interest rate of 4%. Then your monthly payment will be $460. 460 multiplied by 60 months equals $27,600. So you pay $25,000 for car and $2,600 in interest. When you lease a car, you don't own the car. The leasing company owns it. It's basically like renting a car but for a long term. You sign the lease for a certain amount of years, most commonly 3 years. The leasing company determines the estimated value of car at the end of lease beforehand, called residual value. So if we take current value of car and subtract residual value, then we get the depreciation of car over these 3 years. That's the amount you pay over these 3 years in lease payments. There is limitation of miles driven per year on a lease, most commonly being 10,000, 12,000, 15,000, or up to 20,000. Depending upon how many miles package do you take, your monthly payment will differ. At the end of lease you have different options. First options is you return the car to leasing company and you are done with it. You don't have to worry about anything. But if you like the car you can choose to keep it for lifetime. You just have to pay the residual value of car. You can finance that amount at that time. Now we'll see the pros and cons of each options. Ownership. When you finance a car you will eventually own it once you have paid off the loan to bank. But with lease you don't actually own the car, although you have option to buy it at the end of lease. Mileage. With finance you don't have any limits to usage of the car. You are free to drive as many miles as you want. But with lease you are limited by number of miles in your lease contract. If you go above that limit then you will have to pay charges for extra miles driven, which is usually around 20 cents per mile. So if you drive a lot then you might want to avoid leasing. Tax. With financing you have to pay tax on total of price of car, but with lease you pay tax only on lease payment, that is depreciation, which will be lower than financing. Monthly payment. Your monthly payment will be typically higher with financing because you are payment for total sum of car. But with lease your monthly payment will be lower because you are only paying for depreciation during the lease years. Warranty. With finance it will be your responsibility to do car repairs once factory warranty expires. With lease, as the lease terms are usually 3 years, you are always covered under factory warranty and you don't have to worry about any major repairs. Car return. With finance, it's your responsibility to sell the car if you want a new one in future. With lease, you can just return the car to leasing agency at the end of lease and you don't have to worry about future value, it's not your headache. Excessive wear and tear. With finance you don't have to worry about this, and car is yours at the end. Although excessive wear and tear will decrease your resale value when you decide to sell in future. With lease you will have to pay extra charges for excessive wear and tear beyond normal at the end of your lease when returning the car. If we see financially, then keeping the car for long term is always a financially sound decision. Because car loses most of its value in its initial years. But after 3 to 4 years it depreciates very slowly, that is where you actually save money in long term. I would encourage you to finance your car, get a reliable one and keep it for long term until you drive it into the ground. But if you are the kind of person who likes to drive a new car every few years and you can easily afford it, then leasing might be an option for you. Now let's see a scenario where leasing can be beneficial for this kind of person. Suppose if you buy a new car worth $35,000 and you financed it, now after 3 years you decide to get a new car. When you go to sell your car, it is worth $17,000. But you still have to pay $20,000 on your car loan. Now when you sell your car, you actually owe bank $3,000. If you had leased it in the beginning, then your car payments would have been lower and you could just return the car to leasing agency and then lease a new one. With leasing one after another you will never finish paying payment, but this way you will drive a new car every few years. Now deciding between leasing and financing a car comes down to your individual situation. Leasing is only good if you are rich enough to afford, and having a new car every few years is a must for you. But otherwise most people will be better off financing the car, as it will save money in long term. Actual savings starts when you have finished paying the loan. Let me know in comments what do you think will be best option in your situation and why. Thank you for taking time to watch this video. Give a like if you enjoyed and make sure to subscribe for more personal finance videos. Cheers guys and have a good one.